Vietnam is closing 2025 with exceptional momentum. Growth this year is expected to reach around 7.5%, one of the strongest in ASEAN. This reflects robust domestic demand, rising incomes, a healthy labor market, and a strong activity across manufacturing, services, and public investment. As we move into 2026, we expect growth to moderate to about 6%. External conditions will be less favorable, especially after the heavy front-loading of exports to the US this year. Nonetheless, even at 6%, Vietnam will remain among the region's top performers. The strength of 2025 provides a solid foundation for next year. Manufacturing continues to expand across electronics, furniture, textiles, cement, and steel, while tourism is steadily recovering. The government also accelerated major infrastructure disbursement from highways and rail lines to airport upgrades, which has lifted construction activity nationwide. These domestic drivers have kept the confidence high and provided stability at a time when global environment remains uncertain. A key pillar of Vietnam's outlook is its ongoing reform agenda. This year, the government moved to streamline bureaucracy by merging many provinces, districts, reducing administrative layers, and improving efficiency. It has expanded digital governance, integrated national database, and invested heavily in e-government platforms to raise productivity and transparency. Infrastructure development has also been pushed forward aggressively, with approval of major railway links, airport expansions, and hundreds of new transport and energy projects that will shape the country's economic landscape over the coming years. At the same time, Vietnam is widening its trade relationships. It continues to leverage its broad network of free trade agreements and is negotiating new partnerships with regions like Mercosur, the GCC, and the UAE. These efforts help diversify markets and reduce concentration risk as global supply chains evolve. Vietnam is also positioning itself to move up the value chain through its semiconductor strategy, which focuses on chip design, packaging, talent development, and deeper integration with high-tech manufacturing. This shift reinforces the economy's long-term competitiveness. In 2026, the main challenge will come from the external sector. Export growth is likely to soften after the significant front-loading to the US seen this year. While the global electronics cycle should remain positive, momentum may ease. The new tariff framework with the US presents both opportunities and risk. Some products may eventually benefit from lower tariffs, while others could face stricter scrutiny related to transshipments. Even so, sectors with higher domestic value add, such as textiles and garments, should remain relatively resilient. The key point is that exports will continue to grow, but perhaps not at the pace witnessed this year. Domestic demand, however, will continue to anchor the economy. Investment activity should remain firm as reforms and infrastructure commitments move ahead. Household consumption is supported by rising incomes and policy measures that help ease costs for consumers and businesses. Tourism will remain a strong tailwind, supported by arrivals from neighboring countries and newly added visa-free countries from Europe. Meanwhile, Vietnam's competitiveness for foreign investment remains intact, with pledged FDI still rising and wages favorable relative to productivity. Policy settings in 2026 will remain supportive. Fiscal spending will continue to prioritize infrastructure delivery and better coordination across government agencies. The extension of 2% VAT reduction and temporary relief on land rentals will help sustain demand. Public debt remains low and the government deficit is manageable. On the monetary side, the central bank will remain cautious given recent currency pressures, but with inflation contained and growth expected to soften, we will see room for around 50 basis points of rate cuts next year, assuming the currency stabilizes. In summary, Vietnam's growth will ease in 2026, but the overall narrative remains highly positive. At around 6%, the country will still be one of Asia's fastest growing economies. Domestic demand, tourism, and foreign investment should continue to provide reliable support, while the ongoing reform momentum lays the groundwork for a sustained medium-term expansion. Despite a softer external backdrop, Vietnam enters 2026 with solid fundamentals, renewed policy focus, and a clear trajectory towards a deeper and a more resilient growth.